Okay, what's going on, everybody? Welcome to a Capital Hungry live Q&A. So you guys can submit your questions somewhere on your screen here through your mobile. You can submit your questions. Yeah, you can submit your questions, and then we'll just answer questions for a little bit. You know what I mean? What's going on, everybody? Hello, Chris. Hello, Sebastian. Chris_HN. Hello, Jav8 hash. Yes, this will be saved. Mooj, what's going on, Mooj? Mooj been killing it. Great profit. Continue to stay disciplined. Continue to stay smart. Bolivian_Astro, how's it going? How you doing? Khaled QA, what's going on? 604 Fibonacci, how's it going? All right, highs and hellos are done. Now, this is a live Q&A. There's a way you can submit questions. Just submit your questions and don't spam questions in the chat. In the chat, just banter, roast, talk shit, have fun, say jokes, take notes, do whatever you want. But questions, ask it through the question function on your screen there, all right? Forex.QAS, question number 1. Do we get clean view of market in February start? What will be happen next in gold? First of all, learn fucking English. First of all, learn how to speak fucking English. Or even use a translator at least. Like, use a quick translator. This question, I think you're asking, are we going to get cleaner movement on gold in February? Next week, we have FOMC. Majority of market, in terms of market movement, in terms of the Fed pivot narrative, has been priced in, right? Next week, FOMC is the real big focus point for investors, for the markets overall. Whether the Feds will start to slow down their rate hikes, just do the priced in expected 25 basis point rate hike, and of course, not really bring any new hawkish events to the table, which of course feeds the Fed pivot narrative, keeps dollar a bit more bearish and gold more bullish, right? But if the Feds come and bring the heat back to the table, and what I mean by that is dollar domination and a very hawkish sentiment, maybe they do a 50 basis point rate hike instead of the expected 25, and also they are very hawkish in their monetary policy, talking about doing more rate hikes or keeping rates up for an extended period of time, fight on inflation not being done and things of that nature. That will bring dollar domination, dollar strength back into the table, stock market bears and gold bears. So that's the deciding factor next week. I personally think there is a chance they can simmer some of the market upside and hopes and bring dollar domination back into the scene. I think they may have a very hawkish sentiment, a very hawkish monetary policy, where they're going to talk about how inflation moves in episodes and waves. And yes, the declining inflation is a good sign, but they're still wells away. They're still far away from their macro target of 2%, and they can't slow down their rate hike path yet. That may shake a lot of stock market buyers out. Dollar buyers jump in from the dip and dollar goes bullish, and gold goes bearish, maybe rejecting the 1950s, high 1950s, 1960s. So number 1 to summarize, right? Number 1 to summarize, main focus point is FOMC next week. Now, 2 FOMC scenarios. 1, they either feed into the Fed pivot narrative, just do an expected smaller rate hike of 25 basis point, or maybe even no rate hike at all. They slow down the path and how they're going about it, right? and they don't bring any new hawkish events to the table. If they do that, that'll lead to further stock market bulls, gold bulls, dollar bears. But if they bring the hawks back to the table, they bring dollar domination back to the scene, maybe doing a surprise higher than expected rate hike, maybe really cementing in their monetary policy, and through Jerome Powell's speech when he's shutting down questions that inflation fight is not over yet, that the market is getting a bit too optimistic, that they still have a lot of work to do, that will bring back dollar strength, gold bears, and stock market bears. And that sentiment will hold weight through the majority, at least the first half of February, and even into the majority of February. That sentiment will hold weight as long as you don't have as long as you don't have like any reactive fundamental catalysts come into play that the markets have not priced in yet. Like China can still invade Taiwan if they want to, but I don't think that's going to happen for a while. They're playing the slow game. Or you could have further escalations with other geopolitical tensions and new events, but so far it's been pretty quiet. Question from Chris_HN. Explain order blocks, please. Now, depending on your market philosophies and who you may have learned from, or maybe you go to Wyckoff, or maybe you're trying to do the smart money concepts, or you just learn basic technicals, or you're talking about actual volumes from a fundamental perspective, order blocks can have a different definition. My definition of order blocks is, from a technical perspective as a manual retail trader, it's no different than assessing an area of liquidity, an area of accumulation, where as long as you're playing with a main fundamental bias, as long as you're playing with the trend, you can have retests of these order blocks or creations of these order blocks where you accumulate more order flow and volume to continue the trend, more buyers jumping in from those price points and breaking out, which we observe on the technical charts, continuing the trend and so forth. So I just see an order block as a retest to generate liquidity or an accumulation of liquidity to continue the trend, depending on whatever you're trading and what the fundamentals are in play as well. Joe day trades. When price breaks out of a range, do you look for a retest, then enter on the position, either buy or sell? Now, this is a pretty dumbass question from a point of inexperience, it looks like, because it's very vague and the market doesn't work like that. It depends if the consolidation or range is in a bullish trend or bearish trend. It depends what the market sentiment and fundamentals are active that are fueling the information advantage and why order flow is entering the market. So let's just say you have a consolidation zone being created in a bearish trend, and you have fundamentals supporting that bearish bias, or even just from a technical perspective, you can anticipate a bearish trend. Secondary phases of market structure, when you're not having impulsive moves with the trend and just not continuing to print lower lows, you can have pullback phases, or you can have consolidations, accumulation of order flow. More than likely, whenever you see a consolidation phase, as long as you don't break structure, what you're looking to see is a break to continue the trend move. So you can play the breakout, or if you want, you can wait for the retest and continue the trend move, right? As you'd anticipate that consolidation in range was an accumulation of order flow. You're not breaking structure. So let's just say you have bearish structure, price on wheat futures have been moving down, and you're watching wheat futures and it's been in bear structure. But overall, market volume and volatility slows down, and now you're just seeing a technical range being created at the lows of this bear structure. As long as you don't break the bear structure, what you're anticipating is you're just having a period of slowdown in volume, a phase of accumulation of gaining more order flow, or waiting in anticipation for a fundamental event, and you want to play the break to continue the trend, right? So, and another thing with those types of entries, a lot of people have to understand when you go through trial and error, the style of entry that you become efficient with is going to be heavily dependent on your risk adversity, on how aggressive or docile you may be, on your on your personality and things of that nature as well, right? For example, I'm not the best at executing on breakout trades. I've never been good at really taking breakout trades, but I've been good waiting for confirmations and playing with the trend with retests of key liquidity zones, or waiting for confirmations of exhaustion of a trend and getting in at a better price point after I have more confirmations. Whereas other people, some people are not good at that and they're better at breakouts. So you have to go through a trial and error phase to see what you're more efficient, what you're comfortable with, and then stick to that and rinse and repeat, right? Just like, for example, some people's lifestyle, some people's personality, some people's risk adversity, it changes what style of trading they prefer. Some people prefer scalping, some prefer day trading, some prefer swing trading, right? It's all based on their differences in personality, their risk threshold, their patience levels, how they're looking to take advantage of the market and so forth, right? As per their plan, if they have a plan. The real LACO, or the real ACO. What do you think about Bank of England and ECB monetary policy next week? Now, Bank of England and ECB should continue a very hawkish path. Euro and UK inflation is still high on the macro perspective and not seeing a significant decline compared to US inflation and what we've seen with the US yearly CPI from November 2022 to the last inflation report. UK's inflation is still very high, and Euro's inflation is still quite high, and they still have more work to do with their rate hikes and tightening of financial conditions. So they can still keep it relatively hawkish, which would, of course, bring strength to their currencies, give or take after the volatility, liquidity grabs. If they keep it relatively hawkish, it should bring strength to the currencies. But it depends what currency you're trading against. I would suggest next week, because we also have the Federal Reserve, that if we get strength in the British pound and in the euro from hawkish ECB and Bank of England rate decisions, still further cementing that they're going to continue their fight on inflation, still further cementing that they have to do more work with tightening financial conditions, it would be great to play against the weaker yen, where the last Bank of Japan rate decision, the Bank of Japan, Kuroda, they still kept everything dovish, neutral, very loose financial conditions. So the yen is still bearish on the higher time frames. And if you get some individual strength with a hawkish Bank of England and ECB, which brings strength to the British pound and euro, of course, that'd be pretty advantageous to play against a weaker yen. But next week, even though we've had a weaker dollar so far through the start of 2022, as I've explained in the educational webinars, the reasoning behind that, right? Next week may be interesting because if the Feds actually bring a hawkish sentiment and, of course, shut down that the fight on inflation's over, shut down the pivot rumors, shut down the hopes of slowdown, and further cement that they still have to do more work with tightening financial conditions. If they bring that hawkish approach, it's going to bring pretty aggressive dollar strength. And you have to understand, US dollar is the world reserve currency and global business currency. So even if ECB is hawkish and Bank of England's hawkish, and they may bring some individual strength and demand into their currencies, being the euro and British pound, if the Feds come in and bring dollar strength back to the table, that's going to completely take over when you're looking at GU and Euro USD. So you might have this is the example and a scenario. If you get a hawkish Bank of England, hawkish Euro Central Bank, and hawkish Federal Reserve next week with the rate decisions, dollar strength would take over in the pairs like GU and Euro USD. You might get liquidity grabs to the upside on GU and Euro USD with the Bank of England and ECB rate decisions just to generate more order flow, but it would start to flip bearish on Euro USD and GU because dollar strength as the world reserve currency would completely take over, right? If you want to continue Euro USD buys and GBP USD buys next week and continue to respect this technical bullish structure since the start of the year, you're going to need to see a hawkish Bank of England, a hawkish ECB, but a dovish to neutral Fed. still feeding into the Fed pivot narrative, still keeping dollar weak, and then Euro USD edges higher, GU will edge higher, UCAD bearish, gold still more bullish, and so forth, right? What do you think of smart money concepts? Depends what you're asking about. If you're asking about that old midget dork ICT who hides behind these aliases and hides and never wants to show anything and never wants to talk and speaks in all this cryptic fucking coded language to attract your attention, that's all fugazi bullshit. But if you're talking about looking at the financial markets overall from an economic perspective and talking about institutional money and how, or central banking liquidity going down to the institutions and corporations, which you can classify as the smart money going down into the retailers, that is a very valid concept. So if you're talking about real world smart money in terms of the hierarchy of the financial system and what we trade, that's very true. That's a very real thing, right? Market makers, smart money. At the end of the day, having an understanding of macroeconomics, fundamentals, and psychology, that is smart money concepts, right? That is you're increasing your knowledge as much as possible in these financial markets you trade. You're not playing guessing games based on some algo that some old man who hides in the fucking middle of nowhere says he coded the market algo. That there's one price delivery algo and he coded it. Like, use logic. Use logic. These are global financial markets, trillions of dollars. Some midget dork coded the algo, and now he just gives that information on Twitter. Why the fuck is he not well known publicly? If he you know what I mean? Why is he not a Wall Street legend, or he should be known, right? Like, if he with those types of claims, you coded the algos of the market, like fucking retard shit. But the audience gets brainwashed. They get fooled by the vocabulary, and all he's doing is renaming concepts with more annoying fucking verbiage, right? Just stupid order breakers, FVG, just stupid shit, just to be unique, right? Always vague, always cryptic, always fucking stupid. He thinks he's Batman. He's fucking 4'8". He's 4'8", he's chubby and fat, he's just an old fella with his fucking wife back home. Oh, I got the wife chain, got the ball chained to my fucking ankle, man. Fucking on wife duty. Fuck that, man. What the fuck? But to each their own. If you like that shit, man, go for it. Fucking get your fill. Do you think GBP JPY is stuck in a range? Now, GBP JPY on the higher time frame is still very bullish, as primarily the rate differential with a hawkish Bank of England and a dovish Bank of Japan is what has been keeping GJ bullish over the course of like the last 2 years, right? Since like almost nearing the end of the pandemic crash period now, right? Crazy how it's been almost 3 years since the pandemic started. It feels like it was just yesterday. But anyways, GJ is still very bullish on that. Bank of Japan still confirmed a very loose monetary policy, keeping conditions open for more stimulus and monetary easing if need be, and that still keeps the yen fundamentally bearish on the higher time frame. We're just seeing some indecision as markets on the GBP side are, of course, waiting for Bank of England next week. Right? So the Bank of England rate decision will be the main kicker. If they bring a very hawkish sentiment, bring some more demand into the British pound in terms of order flow, then obviously with the yen still being bearish, Bank of Japan keeping conditions loose, and Bank of England keeping it more tight, you'll still have GJ have that breakout to the upside. So Zachariah.gr, do you think gold will drop from this level? Not without a real world fundamental catalyst to support buyers no longer pooling order flow into gold and more sell orders entering the market based on a real world information advantage. The reason gold has been so bullish over the course from November 22 to where we are now is because we've had declining CPI and other U.S. economic data has been falling into recessionary scare ranges. This fuels the hopes of a Fed pivot, and the markets have already been pricing in the potential of a Fed pivot. That's the reason why declining inflation reports still lead to gold being more bullish and dollar being more bearish, because the markets price in a Fed pivot. Hence, stock markets have still been bullish as well. So unless we get a very hawkish Fed FOMC next week, gold is still very bullish, and it's going to depend on FOMC next week. Assad Dali Mazhar. Is it better to get in the market after a news event or scalp during the news fluctuation? Now, this is advice I always give anybody that's looking for longevity in the markets and consistency. From an emotional perspective, it's very easy to get seduced by the market during news and high periods of volatility. When you take a winning trade, you feel like a hero. But when you take a losing trade, you more than likely lose more than you thought you would, or you crash your account and you don't tell anybody about it, right? What I want you to think about is what is more worth it for your long-term profit. Focusing on these emotional moments where your heart is racing, where you're not really in control, where you're playing guessing games, where it's not consistent or reliable? Or is it better to focus on trading conditions where you feel confident, where you feel experienced, where you've seen these various price formations and patterns or fundamentals play out time and time again before, and you take advantage from a higher probability perspective? You have to look at your trading journey and say, yeah, anybody can take good one-off trades here and there. Anybody can take some hero wick trade and they think they're so great, but they're not going to share every time they took a losing trade, right? So what you have to understand is when you look at your trading and you look at the trades you take, some trades that are winners are still potentially bad trades if they cannot be mirrored or repeated again in an efficient manner. Those emotional trades where you just got lucky and it ended up still playing to your advantage, where you're jumping in news and you don't really know what's going on, where you're playing guessing games with a session open or close and trying to scalp it. Can you repeat that in a consistent manner time and time again? More than likely not. So focus on longevity and what type of trades that you can execute that you can repeat time and time again with confidence and with experience and understanding. Why trade periods of volatility and where there's a more confusion and potential for emotional error and mistake to occur? Yeah, sometimes you might get away and make a little bit of profit, but are you going to be able to sustain that type of performance as a human in these vicious financial markets where 90% lose? No, you're fucking not, right? T.PGN. Will you do live streams with Raja Bank soon? Yeah, when Raja comes back, I'll be guest appearing on his New York live streams more often. And also, once I free up my schedule, I'm also going to be doing some New York scalping live streams on YouTube once or twice a week as well, on top of the market update webinars that we already do on Monday. This is a good question. Jack Bailey. With the Fed slowing interest rate hike down and easing monetary policy, will this lead to inflation picking back up as we go deeper into 2023? As you mentioned before, the Fed backed themselves into a corner where it doesn't matter what they do. They're damned if they do, damned if they don't. They're doomed, right? Now, the Feds have not actually confirmed a pivot yet or slowing down of the rate hike cycle. That's going to be potentially confirmed or denied at FOMC next week. The markets have already been pricing in the potential of a Fed pivot since November due to the declining inflation reports. Remember, Because of human greed that is ingrained into these financial markets and ingrained into economics as well, greed, corruption, and power, the whole pricing in concept comes from always wanting to have an edge and be ahead of the curve. Hence that Wall Street saying, buy the rumor, sell the news, right? Always trying to get an edge, always trying to get an information advantage. So since November 2022, ever since we've had US CPI on the year over year starting to decline, the markets have already been pricing in the potential of a Fed pivot, even though the Feds haven't pivoted or eased monetary policy conditions yet either. They're still doing an active rate hike cycle and going to continue to hold rates for an extended period of time. Also, to answer your question, inflation, and you can look at an example of U.S. inflation in the 1970s, right? Where the central bank at that time, where the Feds at that time got too early in terms of starting to stop rate hikes and started to ease financial conditions again, and it led to inflation skyrocketing higher than it was before when they did interest rates. So they have to be very careful here, and this is why they still may keep a very hawkish sentiment and stick to their aggressive plan of tightening financial conditions, because Jerome Powell should understand inflation does not just go down that simple and easy in a linear path. It goes down in episodes, and potentially you can see periods of months of still peaking inflation depending on commodity pricing, asset class pricing, what's going on in the economy and stuff and so forth as well, right? So the Feds have not pivoted or eased financial conditions at all. Them doing a less aggressive rate hike is completely normal. They're not going to continue to do 75 basis point rate hikes. They're not trying to go to 10% interest rate or 15% interest rate. They're trying to go to like a solid whatever 4.5, 5, maybe 5.5, and then hold it there. What the key is, how long will they hold interest rates there? And will they continue to further put the pressure on the fight on inflation? Right? So the market has just been pricing in a pivot because a Fed pivot or the Fed slowing down rate hikes, in terms of market psychology, it supports the stock market greed. It supports the corporate profits. It supports the 1%ers investment portfolios. They want to keep the stock market as bullish as possible. They don't give a fuck that the fucking Goonies, that the 99% are going through a recession or losing our jobs. They don't give a shit. They want to make the wealth gap even wider. They want to get even richer. So ever since CPI has started to decline from November 2022 on the US side, the markets, the smart money, they've already been pricing in the potential of a Fed pivot. Hence, dollar's been so bearish, stock market so bullish, gold so bullish. But the Feds have not actually pivoted or eased financial conditions at all, right? It's just stock market greed. Nick Hay 8, do you think the dollar has bottomed, meaning potential for dollar upside? This is 100% dependent on FOMC next week. I personally think that on the higher time frame, dollar is at very favorable buy liquidity zones and retesting some very favorable buy areas when you're zooming out on your monthly chart, quarterly chart, and so forth. And we have to understand the reason for dollar bears, especially as we're very early into 2023, has been the markets potentially pricing in a Fed pivot. If the Feds bring the heat with FOMC and they bring the hawks and they're still aggressive with their rate hike plan and holding rates for an extended period of time, and the fight on inflation not being done, that could bring back dollar strength, and you'd see a breakout of dollar from these lows, a retest and continuation. Stock market buyers start to liquidate positions, gold turn more bearish as well. But the market's 100% waiting and anticipating the FOMC, and gold is at very key higher time frame price points, digging into the 1960s for sellers to jump in from favorable price points for 2023, set up for this new year. Stock market's at pretty good high price points for buyers to liquidate positions and the inevitable bear market to continue, and dollars at pretty favorable buy price points where it does look like if the Feds bring the hawkish pressure, you can start to get the reversals of the trends we've seen so far. Right? Right? So the only way we're going to get reversals of current trends, aka gold still bullish, trending bullish, Fed pivot narrative. Dollar's bearish for that same reason, stock market still bullish. The only way we're getting a reversal is Jerome Powell brings the fucking heat, fucks the stock market buyers in the ass, no lube, and says, "What are you guys doing? Inflation, yeah, it went down a couple months, but that's not, we're not even close to our goal yet. We might do another 50 basis point. We need to keep rates up longer than we expected." And then boom, stock market buyers melt, gold melts, dollar domination comes back into the scene. But it's going to depend on our boy, on our financial father, Jerome Powell, next week. He's in focus. He's in the spotlight. Joe Day Trades. Someone asked about smart money concepts. Thoughts on Sean Lee? Grow the fuck up. You look like an older gentleman in your profile. You look like you're older than me. Why the fuck are you thinking about other men so much? I only answered the other question because somebody asked about smart money concepts, and I wanted to explain real fundamental smart money concepts. But why the fuck are you asking about other people that you probably don't learn anything from? You don't gain any value from. They're probably just giving you the same stupid dopamine hits and marketing and fucking lifestyle shit. You know the answer to your own question. Like, unless you guys are fucking retarded, you should know the answer to these questions about doing a quick scan on a person's profile and saying, "Oh, wow, another fucking influencer posting random shit in dinners. I can't fucking learn shit from this. This is useless." All right, go to any of these Forex influencers, the Miami influencers, the UK ones, the Dubai ones, whatever. And if they're not sharing any value, if they don't give you any educational content, if they're not actually teaching you anything about the markets, then like what the fuck's the point of following them or watching them? Or you're just wasting your fucking brain space, you know? 910 Kev. Good evening, Jeev. Do you have a place where we can go and study some of the vocabulary you use, such as a PDF? Listen, this is how fucking useless the fucking modern generation. You never heard of a dictionary? You don't know what a fucking dictionary is? If you don't know a word I said, go put it in the dictionary. That's what the dictionary's for. What do you mean some type of PDF, some keyword of the fucking dictionary? Holy, this is what happens when you're so addicted to social media. You're scrolling on TikTok all day. You're fucking jerking your dick off, playing video games, fucking doing stupid, eating garbage food. Your brain's deteriorating. People don't know what a dictionary is? Come on, man. That's crazy. That's insane. My hope for society. You know what's funny? Jokes aside, you know what's funny? When I first started trading and I first started wanting to start a business, start trading, earn more money, become better, faster, and stronger, I always used to have the benefit. I always used to give the people, the masses, the benefit of the doubt. I was like, yo, the people, they just got it bad. The government's after them. The fucking corporations are after them. They're trying to keep them fat. They're trying to keep them weak and so forth. I was like, the people got it bad, man. People try. People are smart. I always gave them the benefit of the doubt. But as I started dealing with more people, as I started meeting more people, as I started making more money myself, as I started answering thousands of questions over 6+ years, my honest consensus is that if I was powerful, if I was born into a Saudi oil family or into some European fucking royalty or into some big tech company, if I was rich and powerful, billions of dollars, I would also exploit the 99%. I'm sorry. You know why? Because they're fucking retarded. They are retarded by choice. Yeah, there's a lot that goes against them. The educational, systematic programming, all of the marketing and advertising, all of the stimuli, all of the pleasures and mental prisons that people are encompassed in, their circumstances. But to clarify, People in first world nations, the general privileged masses, they're fucking retarded. By choice, they're stupid. They're low IQ. They're dumb as fuck. They don't really have much initiative. They don't really have much courage. They don't have much willpower. They don't really have, they don't know how to make positive choices or productive choices for themselves. They're just fucking like chickens with their head cut off, and they're really lost. This person just asked me, this person just doesn't know what a dictionary is. Think about that. This person said, hey, Jeev, some of the words you use, I don't know the definitions. Is there some magical place where like a PDF you have or something? A fucking dictionary, bro, a dictionary. Like, get the fuck off the internet, man. Go read a real book or something. Holy, it's wild. That's insane. Trading Jut. I've been too addicted to the markets. How can I calm my addiction? First, your name is stupid. It's cringe. Nobody likes that shit. It's not fun. Don't do that, right? Second, if you're addicted to the markets, that means you're losing. Why do you want to continue to be a loser? Change your behavioral patterns and follow a strict plan and blueprint of when you trade, why you trade, how you trade, what you trade, and follow that with authority. And for the people in the chat that are saying I'm angry, that are saying I'm mean, this is just my personality. Some of you have never had somebody this aggressive with this much testosterone in your face giving you real information. So it may intimidate or scare you. I'm not angry. I'm not mad at anything. I love my life. I'm in a fantastic fucking position in my life. I'm really, truly fucking blessed. But it's because of my hard work, skill, bits of luck, experience, opportunities, trial and error, and sacrifices that I am where I am, right? I'm not fully happy. I wish I was more jacked, but I'm in good physical shape. I'm in great financial shape. I'm not on fucking any pills. I don't have depression. I don't have anxiety. I don't have fucking sadness. You know what I mean? Like these retard little Mickey Mouse issues that everybody has nowadays. I'm fucking great. So that's just my personality. Just let it, just take the energy in. Let it engulf you. Let it lift you up. Let it shake you up a little bit. Let it make you feel uncomfortable. Let me make you feel uncomfortable. It's okay. You know what I mean? And people can say whatever they want, steroids or whatever. I'm 100% natural. And I know jealousy is crazy. Handsome, rich, charming, comedic, knowledgeable, experienced, fast, powerful, aggressive, strong, financially independent. I'd be jealous too, so I understand. That's why you're in my fucking chat. That's why you're in the audience watching me, joining in, saying, what is this magical man doing today? What is this magical man talking about today? I love to stare at him, right? But anyways, some of you guys are pissing me off though. Abdullah Sheikh, your thoughts on unlimited borrowing decision by U.S. government? Doesn't fucking matter. That's how the government has been running things since the dawn of time. It doesn't matter. The debt ceiling was always an illusion. They always move it. It doesn't matter. It's a fugazi. It's a fugazi. It doesn't exist. It doesn't matter. They just accumulate more debt. The world is run and built on debt, right? So it doesn't matter. Inflation's a bigger issue. Inflation's a bigger issue. I learned from you and Sean Lee. You taught me and you're calling me a dumbass? Yes. Yes, I am. Correct. Has inflation topped out in Fed pivot? No. As long as these commodity prices are still high, as long as the consumer is still suffering as well at the checkout with their like day-to-day basket of goods, as long as stock market is still this high as well, inflation has not topped out. A great reference point in terms of understanding historical inflation, especially in the U.S., is go reference CPI in the U.S. in the 1970s to the potential movement we're seeing with inflation in this modern day. Okay. But this was a pretty good IG live in my opinion. A lot of good questions, a lot of stupid questions, a lot of fun times, some banter. some roasting, advice, golden nuggets, value, knowledge, you know what I mean? Energy, motivation. So yeah, you guys can always rewatch this as you wish. Stay tuned for the Monday market update webinar next week. I'll see you guys next week, Monday, YouTube. And then I'll talk about, during the Monday market update webinar on YouTube, I'll obviously go more in depth with scenarios and my expectations for FOMC, interest rate decisions, and things of that nature. All right, take care. Yeah, this is saved. It's probably saved in my profile under the Reels. And then you can just go to the Instagram tab, click videos, and it'll be there in a little bit.